It's going to be harder to find a job as these layoffs happen. Layoffs have been happening in the history of our,
I mean, just as these layoffs are happening, I mean, I don't have any data backing this up except for just headlines I read in passing. Is like, even as baby boomers are retiring, sometimes the companies just aren't hiring that role, right? It's getting replaced by AI. Like there's a little irony in these AI companies lowering their workers. It's like you just replaced yourself.
All thoughts and opinions shared in this recording belong to the participants. This podcast is meant to inform and educate and should not be seen as solicitation or endorsement for business.
Welcome to the Market Moment. This is Matt here with Isaac.
Morning.
And John.
Hello.
And we've got a few good topics to talk about today. Before we jump in, anything exciting going on in the Johnson or Martfeld households?
Nope. Father's Day weekend.
Yeah.
Good time.
Happy Father's Day.
Yeah. Happy Father's Day to everybody out there. World Cup fever. I don't know if you guys have it. I have it. I'm watching all the World Cup games, more World Cup games than I've ever watched.
Oklahoma, congrats to all the Sooners fans out there. Oklahoma won it last night.
Don't tell me that. I didn't even want to know, man.
Not even in the top 50% of the SEC.
I know.
I mean,
it's crazy.
Crazy.
The last game I went to was Arkansas run ruling Oklahoma.
I think that means
Bob Walker
participation trophy to the Hawks.
We literally run and then they go to win the national championship.
So if you're an Arkansas baseball fan, there's just another team that never won a championship in baseball that has won a championship, not Arkansas, in the SEC. So
OU's won two.
Oh, they have before.
51 and 94.
Thank you for clarifying that. I thought they were. I'm glad. I'm fine then. Good for the Sooners.
Never mind.
Never mind. I'm not upset.
Way less cool.
Yeah, it's good. Yeah, who cares?
It's not even that hard to do.
Yeah, apparently.
World Cup, College World Series, baseball over. Good stuff. Good times.
Football 3 months away.
Yeah, we're if it wasn't for the World Cup, we'd be in a pretty boring period.
It's such a boring time.
Yeah,
if it wasn't for the World Cup, I do like.
No offense, to all you Major League Baseball fans out there.
But, exactly.
After the 140th game, I stopped paying attention.
That's fair. Okay, all right. Let's jump into it for people.
Serious
baseball. Everybody.
Sorry.
All right. So white collar AI layoffs. Big headline this morning. Oracle. Head counts down. I think it was 21,000 from a year ago. I think they were they had employed. Let me pull this up real quick. Yeah, Oracle sheds 21,000 roles over the past year amid a wave of AI layoffs. So they employed 162,000 people a year ago, 141,000 today, 13% over the last 12 months. So that's a big number.
Oh, yeah.
21,000 people's a lot.
Mm-hmm.
And it's not just them. It's a trend that's spreading across.
That's just one company.
One company. Walmart here locally, every year they have layoffs. So it goes kind of like, it's just like everybody expects it, right? There's going to be some layoffs. This is a hot topic. I think that there's things that we can learn from this, but one thing we were talking about before we got on air here was like people working a job forever, Walmart, Oracle, Google, whatever these companies are, they put in their 401k, they're working hard, they don't think about it, and then all of a sudden they get laid off. Mm-hmm. And a lot of times they're in their 50s. And this is one of the other things that's kind of sad about it. The young are taking over, right? So the older push out, and that's just the way it is. And when you're in your 50s and late 50s, 60s, it's really hard to go find another job.
Yeah. Especially
equivalent to what you were making. It's really hard to do that. I think there's a lot of lessons here for folks out there listening as you're building your wealth. Like I've said, this in a financial plan is important in your 40s. I think 30s, 40s is important to start knowing where you're at, because this kind of stuff that is unpredicted, unexpected happens, and it throws a big, and what's the wrench in the monkey or monkey in the wrench?
Yeah,
Something
you had it the first time.
So, wrench in the monkey. It throws a big thing in there that you're not expecting, and it takes you off of your path and your plan. And it can lead to all kinds of, depression, all that kind of stuff, but it doesn't have to. Right. Yeah. If you're doing proper planning.
I think it's a good reminder, especially these tech companies are so, and a lot of bigger companies are so, the compensation is so dependent on company stock. And there's a lot of people that we meet with all the time, and Walmart's a big one here, but there's even more of these tech companies, remote jobs, and a lot of their compensation is the company stock. And if your number one holding is your company stock and all of your income depends on that company there's a lot riding on the company doing well And if you get laid off, it's probably not because the company's doing well. So it's a good time to kind of take a overall look at your risk and how much you rely on that company for not only your current income, but then your retirement income as well.
Yeah, I agree.
Yeah, and so I was sitting here looking at population, the size of the population broken down by the various generations.
Yeah.
You know, and for years we've talked about the baby boomer generation, right? A lot of people nearing retirement, but you know, millennials, the Gen Z and millennial segment of the population has more people than the baby boomer generation, right? And so like you have this, I don't know what the point I'm trying to make, other than you have a lot of people coming into their prime working and earning years that are going to be looking for jobs.
Yep.
With maybe the first time in history, companies having more levers to pull to do things they need to do with fewer people, right? Like the answer's not, hey, we need to keep growing our headcount to be able to grow and do the things. Now we can grow with either the same or fewer. So what does that look like for people in their 20s and 30s in college that, you know, are trying to come out and find jobs? Maybe they have jobs, but they're wanting, you know, more opportunities to grow in their career. Yeah. It's going to be fascinating to look at 10 years from now to see, you know, like what has come to fruition and what hasn't. But
this to me is one of the most interesting times in the history. I know this is going to sound really big what I'm going to say here, but in the history of our country, I want to. This is what I mean by that. The media, the social media, the AI, the computer-driven stuff. The young people are, to me, there's a bigger break between those two generations you talk about, the baby boomers, than any generation as far as like technology. And you think of the workforce, the new technology, the new things that drive workforce now, the young people are going to have that stuff and the old people are not. What I mean, like you can even see it in our office. Like I don't even know how to spell AI. You know, is it A and then I or A dot I dot? I don't really understand it. Yep. So you guys know all that stuff, right? You guys are on top of all that, and the old guys aren't, and the old guys and gals aren't. So as they're pushed out of work, they're going to have a harder time finding a job because it's easier to replace with the newer generation that is on top of all that. And the newer generation is now starting to become the leaders of firms, and the leadership is now that type. Yeah. So I think there's going to be a pretty big issue, like with baby boomers who don't want to stop working are kind of going to be forced to stop working. I'd say, like we've said a million times, if you have no debt and you're in your 50s and you get laid off, you can make it work. Does that make sense? You can figure it out. And I think that's a good lesson for all those out there, like you're approaching your 50s, whatever, and you're in that same boat. Maybe look at protecting yourself, getting yourself prepared for bad stuff that might happen, you know. And I'd say debt reduction is one of the bigger things because it's going to be harder, not to be a Debbie Downer here, but it's going to be harder to find a job as these layoffs happen. Layoffs have been happening in the history of our, you know.
I mean, just as these layoffs are happening, I mean, I don't have any data backing this up except for just headlines I read in passing is like, even as baby boomers are retiring, sometimes the companies just aren't hiring that role, right? It's getting replaced by AI. Like there's a little irony in these AI companies lowering their workers. It's like you just replaced yourself.
Maybe I'm being optimistic. I probably am by saying this, but my hope is, and maybe my opinion on this too, is that where jobs will be lost, other industries will need more people.
Sure.
Sure.
And I actually think there's a case to say, like in the service industry, in our industry in a lot of ways, like we're going to need people. Like people, we can't do what we do and do it well and provide advice and the service that we offer in the way that most people want it without having people, right? There are going to be people, we've talked about it in the past, that are perfectly fine getting advice from AI, having AI help manage their portfolio. And that is now becoming a more viable option. But a vast majority of people still want to work with a person. They want to know that someone is managing the AI for them. That is, you know, they're not just taking blind advice from AI. And so, you know, and you see this in other service industries. Like there are going to be other companies that maybe need more people than they've ever needed. So hopefully that can kind of fill some of the gap. that's kind of what history has showed, right? Shown that a lot of companies can lay off because of innovation and technology, but then others need to fill different roles, and so new jobs are created and all of that, and so it kind of works itself out. It is kind of doomsday scary when you start seeing all these layoffs and that people are saying like, hey, AI is going to take over the world and can do everything for us. Then it's something to be. Don't stick your head in the sand.
Yeah,
like
exactly.
Have a plan. Make sure your emergency fund is funded.
Yep.
Like those kinds of things. There may not be a more important time in history than right now to like just be positioned for volatility when it comes to your career.
Mm-hmm.
I think those are young that are in our industry, right? There is a place because the baby boomers do not want to deal with AI.
Yeah.
They don't want to have that. There's a great commercial out there. I don't remember who does it, but the guy goes and gets a coffee and it's from a machine. He goes and gets something else that's from a machine, and it's on and on. He's a machine, and finally he gets somebody that is actually a person, and he's like, he gets in a car and there's no driver and so on, and then at the end he meets with somebody who's actually a person and he's relieved, and it's that there's more people like that. It's not like AI is just gonna take over everything and we're never gonna have, and then the baby boomers especially who are gonna live till they're 95. There's a lot of years left. The young folks that are in the service and there's still an opportunity for that. Obviously, it's not just all AI driven.
Yeah. For sure. All right, real quick, we're going to keep this short because Zoe told us we had to.
I think she was just talking to John, actually.
Yeah. So SpaceX, 2 charts I want to throw up on the screen here. SpaceX IPO. This chart shows the average price path for the top 10 U.S. IPOs by size since 1999. You can see the average price path is 1 year forward-looking negative 30%, right? And then it shows a very short little gray line for that is SpaceX because it's, a week or two old.
Yeah.
But it's just kind of interesting to look at, hey, here's historically what the price path has been for the large IPOs. And then this is the broken down by the companies showing the top 10 U.S. IPOs by size, 1 year forward looking. So this is, bar chart looking at Alibaba, Visa, Meta, GM, Rivian, AT&T, Snap, Uber, Medline, and UPS. That shows that negative 30%. So, we'll see where SpaceX is at. I think they're down, after the open 52-week low today. So they're trading at less than what they IPO'd at. The IPO was 135, but then I think they started trading at like 160.
160 something, close to 170, yeah.
So they're trading at lower than where they started trading at, 156 today.
I thought I'd keep this short with my perspective on it, but it's... That's not all I think I'm
Thank
going
you
to say.
for the sound effects.
Yeah, that's it.
I think honestly, it coming back down was pretty healthy. Those first 2 days made me nervous.
Yeah.
Because it was just climbing and climbing. I was like, do we not care
if
about
this doubles in 2
profitability?
weeks,
I'm going to lose my mind.
Yeah.
So it's nice that everybody took a deep breath and was like, wait a second. That's not a lot of revenue for a $1.7 trillion company. And they may, years from now look like that. But
let's not lose our minds.
I think that was a good gauge of have the market
sanity
like,
is
given
still
up.
in
There's
the
like
market.
anything tech AI, just throw money at it.
Well, you saw the initial optimism, but then coming back down to earth, I guess. Which at IPO, no sound effects. So we'll see. I think there's a lot of arguments to say like the fair market is well below where it even IPO'd.
Exactly.
So
that's been our position as a whole for the most part. I thought it was going to go a little bit higher off the start, but then obviously fizzle out as they all do. It didn't even get quite as high as I thought it was going to get.
And it definitely fizzled quicker than I thought. But yeah.
Well, it's been actually kind of annoying to talk about for the last 2 weeks. So. And then the last thing is, so we've got a new Fed chair. I don't know if you guys noticed, but kind of a big deal. Let me get this chart pulled up. So volatility and returns following a new Fed chair. Boy, this is exciting stuff.
Yeah.
We're talking about Arthur Burns, William Miller, Bill Miller, Paul Volcker, Alan Greenspan, Bernanke, Janet Yellen. Just saw her. Me and John just saw her talk a couple weeks ago. Yep. Jerome Powell and Kevin Warsh.
Since 1970, there's been 7 completed transitions.
Yeah. So this is forward 1 year S&P 500 returns after a new Fed chair. I don't think there's anything meaningful to take from this, but I thought it was interesting just because it's worth talking about now that Kevin Warsh is in office. or in that role. Forward 1 year S&P return, most of them positive.
Yeah.
Other than Greenspan, most of them positive. Max drawdown,
17.5.
33 with Greenspan.
Oh gosh, 33 is Greenspan. I have less than that on. Anyway, okay,
Yeah.
I've got different numbers. I see that the average is 8% forward.
This is just
return.
in the first one, in the forward 1 year.
Forward 1 year from the trend.
So we have definitely seen some volatility. Like if you look at Paul Volcker, right, had a 17% drawdown. Forward return was 16.5%. Jerome Powell had a 19.8% drawdown. Forward return was 3.4. So definitely saw some volatility in there in the 1 year after. Most of the time ending positive. Again, I don't think there's any takeaways here, but just worth mentioning with the new Fed chair.
I think that's so funny. I think it has nothing to do with that.
Yeah.
Yeah.
You know what I'm saying?
It's just the
there might
market
be
that they inherit.
Yeah, they inherit whatever they inherit, and
Yeah.
it's going whatever direction it's going to go, regardless of who's in. There might be some slight, ramifications for somebody's whatever position on something, but
Well, it's like people.
Yeah.
It's like the media when they try to tie the stock market to, who was in office.
Yeah.
And it's
Yeah.
like, okay, it's not that it has zero weighting,
Right.
but it has a lot more to do with like, well, Bush was dealing with 9/11
Yeah.
and like there's all these things going on that are like completely out of their control that the market's going to react to, things that they've inherited. And so as much as, for instance, as much as Trump would like to take credit for what's
Sure.
going on, it's like, maybe he can help and do things, tax legislation.
sure.
But
things help. But
same thing with the Fed,
Yeah.
It's just kind of a moment in time. They just happen to be the one in that position.
I would argue that most of the time, anything that's done by the Fed or the president or policies or whatever usually do not show their teeth, positive or negative, until years later.
Yeah.
After it's had time to.
Well, and man, how
Work itself out.
quickly things change, right? It wasn't long ago when everybody was like, hey, rates are going to start coming down.
Yeah.
Right. And now it's like, well,
Maybe rates are going to go back up.
yeah,
I've
it's
got
like not only are they not going to come down, but
The odds for the July meeting is 34% chance of a hike.
yeah.
Which I don't like.
No.
Yeah.
Yeah.
So,
And this changes every day.
It
Yeah.
changes every day.
Yeah.
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 All right. Any other parting comments so we got SpaceX.
We got World Cup. Okay,
Kevin
just
Warren.
real quick.
Do we have an episode before 4th of July? Yeah, we'll have one more.
Yeah.
Okay.
Who's going to win the World Cup? That's my
The
only.
United States of America.
Ooh, America.
If you say anything else,
I think it's going to be either the United States of America
there you go. Thank you.
or France. One of the two.
I haven't watched a single game, unfortunately.
Oh, yeah, you should watch them.
Yeah, I know. I need to.
France has got, just give it, France has like
When's the U.S.
The
12
Mbappe
All-Stars.
guy?
When's
Yeah,
our next
Mbappe.
Yeah,
game?
yeah.
Our next game is tomorrow night. Or
Thursday.
Thursday night.
Thursday.
Sorry,
Thursday
Thursday
night.
night at 8 o'clock.
Okay. All right.
And we play Turkey.
I'll
And
be
it
at
doesn't
10U
really
baseball,
matter.
but
So don't, it's fine.
It actually doesn't
It
matter.
doesn't matter.
It kind of doesn't matter.
Oh,
We're
because
slated
We're
as
locked
the-
in to go, and if they win, they go. I don't know how it works.
Yeah, it's so confusing. Anyway, only 8 teams don't make it to the next round. So it's like a lot of teams make it.
okay. Well, that was kind
I
of
mean, that was comparable to ESPN right there, boys. That's pretty good.
Dun-dun-dun, dun-dun.
well, as always, we appreciate you watching and listening. Be sure to check out Eli's data brief. I know he's got a new one coming out soon. Give us a like, subscribe, shoot us an email, or leave us a comment with any questions that you have, and we'll look forward to seeing you guys next week.
The hosts of the Market Moment podcast are employees of Mach 1 Financial Group, LLC. Mach 1 is a registered investment advisor located in Rogers, Arkansas. A copy of Mach 1's current written disclosure brochure is available through the SEC website and available at disclosures.mach1fg.com.